Right then.
Okay.
Do you want to do the intro?
Yeah, well, we're going to start now.
Okay.
Hello, everyone, and welcome to DTE's first online tax club. First of all, thank you very much for joining us today, and we hope that you've been keeping well for the past few months. It's great to see you all today. We've got overwhelming response to this session. We hope that you'll find it useful. Obviously, it's a bit of a pity that we can't see each other over a cup of coffee or tea and the usual sandwich lunch buffet, but it's also good that during this session we'll be able to welcome members from other parts of the country who normally can't make it to our offline events. So without further ado, I will hand over to Alan to start the session. If you have any questions, please feel free to pop it in the Q&A box, and the speakers will either answer live or wait until the end of the session to answer. Okay, over to you, Alan.
Okay, so I can start. Everybody see me? Good. Right. Thanks for coming, and a big thank you to Ella actually for organising this. Technology at its best. I really do appreciate the effort people have put to attend today, and I'd just like to say hello to a few people across the UK who I don't normally see that often these days, particularly my friend down in Cheltenham and Gloucester, also my friend up in Hartlepool. Right, and most of you have attended a tax club before, and as you know, it's a well-scripted, well-run event. Right, the first thing I want to do is just go through a bit of formatting what we're going to do. I'm going to speak probably...
Sorry, Alan.
Yeah.
Sorry to interrupt you. Could you move your camera down a little bit?
Down?
Yeah, like that, so people can see you better.
Thank
Excellent.
you, Ella. Okay. Right, so there's a number of things I want to cover. I want to do about half an hour or so. Then we have one of the stars of the show, Mr. Steve Howard, on, who's going to give us an update on VAT. And as I always say at these events, you're allowed to give him a hard time. Now, then we've got Jane, who's going to comment on some HR issues, which I think are very current at the moment in relation to all what's going on outside. After that, there will be hopefully some time left for me to give some further points. Those who know me well know that I spend a lot of time in combat with HMRC trying to sort issues out with the clients, for the clients, sorry. One thing that I'm aware of, and I think I've covered this in a newsletter I did recently, it's so fresh, I find it annoying, and it's linked to something that's not even finished yet, which is the coronavirus job retention scheme. The scheme was dreamt up in March, late February, early March. It's very admirable, but you have to understand HMRC, while they are givers, they're always takers. And the big thing that they're pushing or making sure people are aware of is that there is a new penalty regime going to be put in place for those people who have incorrectly claimed under the job retention scheme. Now, HMRC put this out for consultation for 2 weeks, which is nothing. And it's unique, really, the amount of time that they didn't give for the consultation to take place. But the bottom line is that once it is on the statute books, there are 2 simple rules. If you have overclaimed on a JRS claim, you have the 30 days after the submission to correct it, or if it is later than that date, 30 days after the new rules go on to statute. The key issue is, though, is that I already am aware, anecdotally, I even have an extended family member where this impacts, where a business, I'll be honest with you, in Greater Manchester have furloughed someone, but they're still working at home. Not every day, so it's not flexible furlough as we will know now, but it's under the old rules. And HMRC have said, if corrections aren't made within the period that they're looking at, they will treat it as being deliberate and concealed, and it will attract a penalty of at least 50% of the clawback. Now, the big question you've got to ask yourself here is, how will that be done? Well, I am sure already nationally there will be a list of employees who will have complained, and the revenue, once the powers are in place, will no doubt start looking at them. Equally, for those of you in the profession who attend what used to be called page one audits, employer compliance visits as now, I am sure that once we get into the autumn, those questions to do with the Corona Job Retention Scheme will be near the top of the list to ask questions. So the revenue will have two-pronged attack here. It will be a general question on new visits, but equally, some of the visits may even be dressed up as visits based on information you've already got. I would strongly recommend that everybody makes the effort to check with their clients that their claims are solid. Now, if you are a payroll bureau, I would hope that when you've been processing furlough claims and claiming the money back under the JRS, that you have had in place sufficiently robust questions and answers that you're comfortable with the information that's been processed. If you're not, you do really need to have a chat with the client and try and get it sorted. As and when I know the actual date of this coming into play, and I'm guessing and say probably before the summer recess, you've got to get it sorted. So please just take that on board. It worries me because the government has been generous, but equally HMRC are going to be less than generous when they start looking at it. Now, the mini statement from the other week, good old Chancellor Rishi, he came up with some good things, and I'm hoping that Steve will cover some of the VAT things, particularly in relation to the hospitality and tourism industry. One question I want to just ask Steve, and he can answer later, is if I was to book a bed and breakfast, say, for Easter 2022, would I be able to benefit from the reduced rate? And I'd like, if you could, Steve, to cover that. Stamp duty, we know that to boost the housing, he's increased the threshold from the 125 up to the figure of, what was it, 500,000. Please, make sure any people who you act for who are considering selling or whatever, that they do become aware of the new rates. I'm sure everybody is aware of the new rates because of the way it was trailed on the evening news when it was announced. For those who aren't sure, it runs from the 8th of July until the 31st of March 2021. So take that on board and hopefully it will do what they want. The Eat Out to Help Out thing, throughout August there's a 50% discount capped at 10 quid a head. Eating out on the nights I never eat out, on Monday, Tuesday and Wednesday. So the government will cover the discount given. They say that businesses could register from Monday just gone, the 13th. And as and when the claims are submitted, the monies will be paid within 5 working days of a claim being made. If that happens, I'll be really impressed. What else have we had? We've got the new position with, if people who are furloughed and they continue to be employed through to 31st of January 2021, and in the period November 20 to Jan 21, they earn at least £520 per calendar month, which I think from memory is the national minimum wage levels, then there is this further £1,000. Had a number of clients querying that, thinking that they would qualify for it if they didn't have anyone furloughed at that time. As I understand it, the individual has to be continuously employed through the period to 31st of Jan 2021. We can all see why that date's been picked. It will hopefully encourage employers to keep some people on the payroll through the festive period. So I think really from a practical point of view, that's so Ken said here, it was stated as a lower earnings limit, not national minimum wage. I wish, if that's the case, I apologise, Ken. I'm just reading my notes here. Yes, you're right. The 520 is equal to the current lower earnings threshold for Class 1 national insurance. And the other question, Emily, about furloughed directors. If the directors are genuinely furloughed and they are meeting the criteria, I see no reason for that not to be available. But I could ask the question, which is, would a business still be around if it's still furloughing its directors in November through to January? If that is the case, and yes, on the face of it, we've had a lot of problems with directors, particularly where the directors historically have been on an annual basis. So you just got to be careful with directors. There's one situation I'd want to tell you about. As you know, I always have stories to tell, and one of them is one of our bigger clients. You may find this hard to believe, has been registered for PAYE and national insurance for many years, and the incumbent accountant, for whatever reason, didn't do a Sage update correctly back in April 2019. Payroll was run each month, the RTIs. The tax and national insurance was paid over. When they came to submit a JRS application, it was rejected because they said you didn't have a payroll on the 19th of March. And as you know, the 19th of March effectively meant that you'd run a payroll for month 11, February. And we looked into it. And the story we were given is that they had a computer glitch. And for whatever reason, the RTI returns had not gone to HMRC. And as a result of that, you couldn't make an application under the JRS. They paid the pay as you earn for about 10 months of the 12 of 1920. But the computer said no. So we lodged how can I describe it? An appeal against the decision. And we did it in old-fashioned paper. And it went in with about 50 pages of enclosures, which was all the monthly payroll, a selection of the RTI P32 creations and everything. The only thing we couldn't demonstrate was that it'd been accepted by HMRC. We even sent them a schedule, details off the HMRC account showing the money's received. And one of the cornerstone points we made is, isn't it weird that HMRC were accepting this money when they didn't have a payroll to accept it? And as a result of that, we didn't hear anything. About 2 weeks later, we actually went into the complaints procedure with HMRC. And I don't know if any of you have ever been into the complaints procedure. And the position was that our complaints has not been upheld. They've said the legislation makes it clear if you have submitted an RTI return for that by that 19th of March for that period, if you haven't, you can't have the claim. You can't process a JRS application. I have since then, we got that, well, it was issued actually, the answer to the complaint was issued once we went down that route, was issued in about 4 days, which begs the question, did he read all 50 pages I sent them? But it went into the client's spam. So we didn't pick it up for a week. It was only when I said, come on, just we need to chase up. Now, interestingly enough, with the complaints procedure, they don't give you a phone number. So all you can do is email. So we emailed this lady whose name rang a vague bell from some connection years ago, saying, can we have your phone number? We really need to discuss this. That was 3 working days ago. We've not heard anything. So I'm now having to consider ratcheting it up to a different level. They say in their email that if you're unhappy with the decision, you can go to the adjudicator's office. The adjudicator's office says they will only get involved after 2 reviews. Well, we don't believe there's been 2 reviews here. So I'm just literally just before the tax club started, I put in a call to a HMRC individual who I think might be able to help and just see where we go. So I will keep you posted on that. But it just shows you when something is given, if you've not checked things as you've gone along, it can backfire. And we're talking here of over £70,000 of potential JRS monies. And the client's saying to me, if we don't get it, you know, we might not survive the autumn. So we'll see where we get to on that. Right. Just want to touch on one tax case at this point. It's to do with referees. Now, I don't know if you know, there's 2 types of referees. You've got the referees, these are in, as in soccer, as the Americans would call it. You have those who carry out their duties in the Premiership, and you have the duties of those who carry out their role in the Championship and below. And this involved a number of referees employed, I use that term loosely, by the English Football League, so the Championship League 1 and 2. HMRC argued that they were all employees and were seeking the arrears of tax and national insurance. And it's gone through now, I think, to the High Court, and it's been determined that they are not employees. Whereas with the Premiership referees, I'm not sure what the term is, the panel they have or whatever, they are effectively full-time people. Those in the EFL and below who receive monies for their services aren't. They're on just a, they're in someone's little black book, and they are then allocated a game. Can you turn up to play Salford City versus Bradford City? Yep, no problem, right? Be there at the usual time, 2 o'clock and whatever, and you get the fee. The Revenue argued that there was a mutuality of obligation here because they would have to agree to turn up and then carry out the function. The key was, though, that in the end, there was no mutuality of obligation because they could quite rightly say, sorry, can't make Saturday, I've got the church jumble sale. It's that simple. So it's interesting to bear in mind how the term of mutuality of obligation is rising all the time on HMRC's side. I've never placed a big emphasis on that. And as a result, I've always said to the revenue officers, it's a bit of a red herring. And in a way, it's proving the case. They put all their eggs in one basket on that argument and they've lost. So referees below Premiership level are paid gross, and presumably they declare it as a self-employed referee. I guess if they wanted to, they could take an assignment in the National League, they could play in the Northwest Premier, whatever. So from that point of view, it's useful to note. Okay, now I'm just going to look at 3 questions I've got here. Just bear with me, see what I've got up here. This is from my friend in sunny Liverpool. We've had a client who has applied for a payroll on the 22nd of, for a first payroll payment, new business, and forgot to inform us beforehand. It took a long time to receive the payroll, online was missed. The furlough was rejected, we appealed, and this was also rejected. Well, Ken, same here. That's not far off what I'm now saying. All I can say to you is I'm waiting for a phone call from this person within HMRC in the alternative dispute resolution team to see if that is the appropriate route to go down. But your question demonstrates the problem. They will say there was no, in your case, I think you've probably got no chance of winning. In my case, I think we've got a bloody good case to put forward because clearly there was a pay-as-you-earn scheme in place. Clearly, payments had been made under pay-as-you-earn, deducted and paid over to HMRC. It's just that the incumbent accountant, who I'm seeing tomorrow to probably upset, because he's going to have to tell me some truths as opposed to half-truths that he's told me so far, to be able to construct an argument that, how can I put it, morally, it's right. In your case, Ken, I think the issue is that, yeah, it was a brand new co, and for whatever reason, if no payment was made by that date, I think you'll struggle. And your answer, what question you've said there, it just turned it down. That's exactly the wording we got. Sorry, but no, and that's it. As if it doesn't matter. And the problem is, we need someone being assigned who will look at these pragmatically. And that's what I'm going to try and push and achieve. I will keep you, Ken, up to date on that. Right, without further ado, Ella, I think we'll now have the alleged star of the day, Stephen Howard, to give us a piece on VAT, and then I'll do a little bit more, and then we'll come over to Jane. All right.
Alan, have you replied to all the questions in the Q&A box? I noticed that a few have come up. Would you like to...
Yeah, they've come up. This is right. Well, we've discussed those ones. I've got one here from my friend in Hartlepool. I have a client whose first pay date was 28th of March. As I submitted the RTI in advance of the 15th, HMRC agreed I could claim, and hopefully they will. Well, I think that's spot on because you got it in by the 19th. So yeah. I see. First pay date was the 28th of March. Right. John, can you do me a favour? Can you send me an email later and just tell me what you actually said, and did you get it in writing from them? Because if it's got a name on, I might be tapping that person, and I might be passing that on to Ken if that's all right.
So I suppose John has heard you, Alan. So I'm going to just take this as an answered question, and we'll move on with Steve.
Da, 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 da. Do I mute?
Yes, please mute yourself, Alan. Could you start now, Steve? You need to unmute yourself. I think you haven't unmuted yourself. Can't hear you. We can't hear you.
Can you hear me now, Alan?
Yes, can hear you now.
Okay then. Oh, so starting, yeah. Can you hear me? Yeah.
I think we can hear you. We can hear you.
Oh yeah, sorry.
We can hear you.
Okay, so the VAT changes in light of the government last week. Firstly, catering and takeaway food. Although the food of most food and drink of a kind used for human consumption is zero rated, there are some exceptions. Some items are always standard rated. Other supplies can be zero rate, reduced rate from today, 15th of July, to the 12th of January 2021, because they're made in the course of catering. To reflect legislative changes, they are temporarily introduced a 5% reduced rate on supplies of hot and cold food for consumption on the premises on which they are supplied, hot and cold non-alcoholic beverages for consumption on the premises on which they are supplied, hot takeaway food for consumption off the premises on which they are supplied, and hot takeaway non-alcoholic beverages for consumption off the premises on which they are supplied. Unfortunately, the temporary benefit from the reduced rate does not include any alcoholic drinks. Hotel accommodation is similar, so the supply of hotel accommodation and similar establishments will qualify for the reduced rate of VAT in respect to supplies of the provision of sleeping accommodation in hotels, inns, boarding houses and similar establishments, the grant of a licence to occupy holiday accommodation and charges for seasonal pitches for caravans, including supplies of facilities provided in relation to the occupation of the pitches for tents and camping facilities. HMRC have confirmed that deposits received by hotels and campsites before the rate change, where the actual stay takes place after it takes effect, can also fall within the reduced rate. Now, with Alan's query, I believe that if you take a deposit now and they stay after the 12th of January, the deposit will be at the 20%.
Only if I pay only the deposit, Steve?
Yeah, I think so, because there's no guidance on it, but the reduced rate only falls if you stay between today and the 12th of January.
Right. Okay.
So if you can have the 5% before today's date, but you stay during the period, that's 5%. If you pay deposit now and you stay after the 12th of January, I see that'll be 20%.
But if I paid for the whole lot up front, if I was foolish enough to do that, I'd get it on, I could have it all at 5%, even if it was booked into 2022.
To be honest, HMRC's guidance doesn't confirm either way.
Oh, good answer.
It's only about up to people paying deposits now. They may update the guidance at a later date. Right,
okay. Fair enough. Thanks, mate. I'll let you get on.
Okay, so a new temporary reduced rate also applies for admission to certain attractions from today to the 12th of January. This applies to businesses that make supplies of admissions that are currently the standard rate. This includes typically shows, theatres, circuses, fairs, amusement parks, concerts, museums, zoos, and cinemas. The reduced rate does not include any supplies that are VAT exempt. So if you go into a library or a museum that are exempt, they'll always be exempt. The temporary reduced rate does not apply admission to any sporting events. The reduced rate only applies for the admission into the venue and nothing else. So moving on, the temporary VAT zero rate will apply to all supplies of PPE, which are made between the 1st of May to the 31st of October 2020, as this has been extended. The PPE, as you may know, extends to disposable gloves, disposable plastic aprons, disposable fluid resistant coverings or gowns, and surgical masks, filtering face piece, respirators, and eye and face protection. As you all may be aware as well, HMRC have confirmed that the VAT payment deferral period ended on the 30th of June 2020. This means businesses need to set up, cancel direct debits enough time for HMRC to take the payment, submit VAT returns as normal and on time, pay the VAT in full on payments due after the 30th of June. Any VAT payments you have deferred between the 20th of March and the 30th of June should be paid in full on or before the 31st of March 2021. You can make additional payments with subsequent returns. If you're unable to pay the VAT due, you may need time to pay as soon as possible and before the payment is due. Now, I understand that HMRC have set up a payment support service. The priority is to contact the PSS at HMRC before the VAT is legally due for payment. Any time to pay agreements won't take then subject to a default surcharge, which will be good. Before you call the PSS, make sure you have the client's VAT registration number and bank account details to hand. Also be clear about the amount of VAT that is outstanding in your proposal to settle the arrears. HMRC officer will speak to you, will also require details about why you can't pay the VAT on time. A partial payment on time will normally score brownie points rather than asking the liability to be deferred in full. Now, the HMRC's PSS team's telephone number is 0300 200 3835 if anybody needs it. It is tempting for clients to ask advisors, what is the maximum time HMRC will let me have to pay? This is always the wrong approach. The client needs to establish how much you can afford to pay and when, then justify the time period to HMRC.
Can I just say, Steve, I've just had a success this morning, £1.4 million of VAT payable over 12 months.
Good stuff.
Yeah. I've had to promise to be the father of all the children of the people in HMRC to achieve that, but we got there in the end.
Well done. So, reasonable excuse. The concept of reasonable excuse has always been a key part of the HMRC's VAT system. It has been the subject of many tribunal hearings over the years because it is not clearly defined in the law. In the VAT world, it is irrelevant when a business has missed a deadline, e.g. filing a return, or registering for VAT on time, or paying tax, or applying to an information notice. The HMRC guidance on reasonable excuse now includes a paragraph that is specific to the impact of the virus, stating HMRC will consider coronavirus as a reasonable excuse for missing some tax obligations, such as the payment of filing dates. Explain how you were affected by coronavirus in your appeal or reconsideration letter. You must still make the return or payment as soon as you can. Many other clients may have taken advantage of the VAT holiday payment window and pay their dues by the direct debit. But don't forget, they must have to reactivate the direct debit, as said before. Now, moving on, in response to the coronavirus pandemic, multiple EU countries have introduced a temporary reduction in their VAT rates. These mainly relate to the hospitality sector and introduced in countries including, but not limited to, Germany, Belgium, Greece, the Czech Republic, and Austria. Reductions have been implemented vary in terms of value and length of time they apply for. It's important for any business operating in the EU countries where reductions have been enacted to apply the correct rate of VAT, including businesses that account for the VAT using VAT MOS or are registered in any other EU member states as they make supplies from that EU country. As it looks like there's going to be a no-deal Brexit, it will occur when the UK leaves the EU on the 31st of December 2020. A UK business who invoices customers based in the EU will need to plan for this eventuality. For example, if your client sells to EC consumers and are VAT registered in other EEC countries post exiting the EU, their distance sales VAT registration will become invalid. Have your clients considered who will deal with the import of VAT and duty? Your client's business or your customer? If your client sells to business customers in the EC member states, will they act as importer of record and recover the import VAT? Or will they expect your client's businesses to do so, which could result in your requiring a VAT registration in a number of EU countries? Does your client trade with businesses in the EU and use a VAT accounting method that can't be used between EC VAT businesses, such as a second-hand margin scheme? The other significant change is that the agreement now reflects the UK's aspiration to trade with the EU with zero tariffs and quotas between the EU and the UK. If your client trades with the EU and requires practical advice, then please contact me. Now, there's been very, very few VAT tribunal appeals recently in light of COVID. However, there's been a very interesting one in respect of a business that provided ultrasound scanning services to pregnant women, whether regarded as medical care or whether treated as a standard rated souvenir. The VAT tribunal concluded that it was allowed that the ultrasound scanning services supplied privately to pregnant women where medical care and should therefore be exempt from VAT. The appellant in this case was a franchise operator, and two of its franchisees were supplied ultrasound scanning services to pregnant women. The scans were provided from facilities on the high street and were in addition to the scans provided by the NHS as part of a routine care of pregnant women. Medical care is exempt from VAT, and this is supplied either by a registered healthcare professional or by someone working under the supervision of a registered healthcare professional. The scans provided by the appellants were all undertaken or supervised by registered sonographers. The tribunal reviewed the scanning service supplied and concluded there were medical care, and the appellant's appeal was therefore allowed. One of HMRC's arguments was that because ultrasound scans provided the pregnant women by the NHS meet their clinical needs, additional scans obtained privately from the appellant must have been non-medical motivation, i.e. they were just used for imaging and bonding, etc. However, the VAT Tribunal was not convinced by the logic of this position. They found that the appellants were providing medical care which was additional to that was providable by the NHS. Therefore, if you have any clients who provide medical care, they regard its suppliers as exempt, may require a review to correct the VAT liability, as you see on many occasions the VAT treatment has been wrongly implemented. And the final point now, the proposed introduction of the domestic reverse charge for the construction services due to be implemented on the 1st of October 2020 has been delayed again until the 1st of March 2021. The introduction of the legislation has already been pushed back from the 1st of October 2019. The intention of this further delay is to allow businesses time to recover the challenges posed by the coronavirus pandemic. When this changes comes into force, the customer receiving the qualifying construction services will be required to account for VAT due on these supplies directly to HMRC. Under the current legislation, it is the UK supplier that is liable to account for the VAT on these supplies. This VAT element is then recoverable subject to normal rules. The aim of this legislation is to remove the scope for fraud in the construction sector. Oh, I've got 3 questions.
You have indeed.
What is the impact on flat rates? It'll be the same as normal. It'll just be, you'll apply. Oh, hang on, I think HMRC have actually issued on their public notice the correct flat rate percentage to be used. So if you look on HMRC's notice flat rate scheme, I think it's notice 733, that's been updated.
Right, okay.
Are restaurants, cafes, etc. obliged to pass on a reduced rate? No, they're not. Unfortunately, you remember when the reduced rate was reduced from 79% to 15%, a lot of businesses didn't pass on that VAT saving to the general public. They retained the VAT benefit for themselves. So, unfortunately, they're not obliged to pass on the VAT saving. They can keep it for themselves.
Not good, but that's
no.
the world.
And again, to Stephen McDonald, I think if you go on the HMRC's 733 notice, they've updated the flat rate scheme percentages on there.
Okay. Okay, right. Thank you, Steve.
My pleasure.
You may mute yourself.
I am now muted.
Excellent. Right. Before I pass you over to Jane, a couple of things I want to go through. While you have been entertained by young Stephen, I got an email from Emily about contacting HMRC on direct debits. Hi, Emily. From a practical point of view, I've sent you a reply, but it is a problem getting through to debt management. I'm guessing here the scenario is that someone has got arrears and they want to get the arrears into a plan and get a direct debit in place. Most clients that I am aware of don't like speaking to the revenue. And personally, I don't. There's a dead simple reason for that. I can earn a fee if I do it for them. But there is the agent helpline at Debt Management. And as I've sent you the phone number, Emily. And the trouble is, you can ring up, you will get through quicker. You will have to pass security. So you must have an intimate knowledge of the client. You can have the client present with you, but have a system whereby he shuts up when you tell him to. And if you can have the client there, that will go a long way to sorting it out that day. The reason I say that is that it's historically probably 12 years ago plus, when this agent dedicated line was set up, they would agree direct debits with you. And the most famous one I did 36 direct debits one day for 36 partners in a firm of lawyers. And as time has passed, though, they are more security conscious and will not take the banking details off an accountant because they believe they're breaching security. And I would say currently maybe 8 out of 10 occasions that is the case. But occasionally they do take the information off me because they're desperate to get something in place. And in fact, I was helping only about 3 weeks ago a good friend of my wife's who was trying to set up something with the revenue, and she couldn't get through. And a bit like what you said, Emily, you just no luck. So she came to see me, and we rang the agent dedicated line. I got through within a record 22 minutes and got it all sorted. She gave permission for me to speak. I told her I was from DTE, etc., etc. So if you're prepared to get involved with the client, you can use the agent dedicated line, get through the security, and then when you've got through the security, you can deal with it. But you've got to be comfortable that you want to speak to the revenue in the first place. It's got to be that you've got all the facts in front of you. It's got to be that you've got some idea of what their assets are. They'll ask all those silly questions like, have you been to the bank? Have you asked Auntie Molly if she'll lend it you? Whatever. So you've got to go through that rigmarole with them. If you go to the client's premises on a regular basis, perhaps you could do it when you go there. So that's that. Hopefully that covers it. But if Emily, if you want to speak in a bit more detail about it, by all means, give me a ring later on my mobile. For those people who don't know my mobile, it's 07715 755 238. Now, one other thing before we come to Jane. I've recently had a very sad event in my professional life. A chap who I work with, who was a partner like myself at DTE, and I worked with him for about 14 years, died. Excuse me. And he was a member of the Connect network after he went and set his own practice up. And we were his default practice, which has involved us effectively, certainly in the short term, taking responsibility for the day-to-day work that's needed to be done in his practice. So, fielding any queries from clients, etc., etc. And I had a chat last week, I think last week, early this week, with someone I've known for some time, is looking for that security. And the regulated body he's with have insisted that he must have some sort of default practice in place. And what I would like to do with people is, if you don't mind, I'll confirm my email address in a sec. If you have any concerns yourself about who the default practice should be for your practice, or indeed if you would be interested in being a default practice for another practice, would you please just email me and let me know, and then I can have a word with my friend who I chatted to earlier in the week to see where we go. the issue generally is that if you're in a regulated body, you've got to have that in place. And a lot of practices, indeed a lot of people who are listening today, watching today, run relatively modest sized practices of which they're very happy with, very successful. But you do need to ensure that you have taken the appropriate steps, that if something unfortunate was to happen, that you have actually got your client's interests taken care of. So again, yeah, if anybody is interested in sort of more about that, or even me putting you in touch with my friend who sent me the chat I had with him earlier this week, please let me know. That would be appreciative. Right, Ella, I think we now need Jane. So if you can organise Jane. Jane I've known for about 4 years. She's a HR specialist. Some of you who've attended the Northwest traditional tax clubs will have met Jane before, and she's going to provide us with a bit of a topical update on HR issues. I was chatting to Jane before we started, and I talked about a health and safety match. She says, Alan, I don't do health and safety. So there's a keep it to HR. Is that fair, Jane?
Yes, yeah.
So before Jane start, I just want to say sorry to some of the participants who were unable to hear Steve very well because of the poor connection there. If you have any questions, or if you asked some questions earlier and he replied but you couldn't hear it very well, you can send him an email directly, or you can just contact me and then I'll pass it on to him. I will also check with Steve later on about his notes to see whether he can circulate it to you. Other than that, we'll move on to Jane.
Can I just say one thing, Jane? That's not a real palm tree. If it is, you're barred.
Well, I was just going to say, you've asked me to talk about HR headaches of furlough, and clearly the headaches are that bad that I've had to go to my holiday home in Barbados. So it's beautiful here. The skies are blue, the breeze is blowing. But yeah, so I'm just going to cover a few topical issues, and it's really made up of questions that we've been being asked quite a lot over the last few months. It's been a busy time in the HR world during this period, as I'm sure you've all experienced the changing guidelines on a sometimes daily basis. So we've been having to react and respond to what HMRC are putting out in terms of the furlough, often weekly. One of the main questions that we're asked about is about holidays. When the furlough scheme came into play, no one really knew what on earth we could do about holidays, and there was nothing in the guidance that gave us any indication. Since then, it's become clearer. It's clear now that holidays accrue as normal during furlough, and it's also clear that holidays can be taken during furlough. So any holidays can be taken but must be paid at full contractual rates rather than the 80% furlough pay. Another thing that we now know that we can do is actually force holidays onto staff who are furloughed, and that was always a big question mark, because in the working time regulations you are able to essentially, I use the word force nicely, but you're able to request that employees take annual leave, providing you give them enough notice, which is twice the period of leave. So there was a big question mark about whether we can actually still continue to do that, because from a practical perspective, people who've been furloughed for months and months on end, we as employers don't necessarily want them to build holidays up towards the end of the year and then be off again, having accrued a lot of leave. So we now know that we can require employees to take annual leave during a period of furlough. So that's another positive, because financially, if they're on holiday and you're still paying 100%, you can still claim back the 80% under the furlough scheme. So it does make sense. There were some regulations that came out fairly recently, a few weeks ago, about employees being able to carry over annual leave if they've been prevented from taking it due to COVID-19. There's a little bit of confusion out there in the employee world as to whether that's just an entitlement for them to say, I want to carry over my annual leave, or not. And the reality is that no, it's not up to them to be able to say, I don't want to take my holiday, I want to carry it over. It's only if the employer hasn't been able to allow them to take that leave because of something to do with COVID-19. So whether that's an operational issue or something along those lines. But if there is, if there's something that's prevented annual leave being taken, then the employer can allow that leave to be taken over for up to 2 years. So that's something else that can help a lot of people. Moving on from annual leave, we've been asked a number of times whether we can change employees' roles whilst people are working and whilst some people are furloughed. On the face of it, the answer is yeah. You know, if you've got a flexibility clause within your contract, there's no reason why you can't adjust the roles of certain people. There's commentary out there from in the legal profession about whether HMRC are going to look kindly on this when they start auditing the job retention scheme, because what they've said is that it's okay to reassign duties from people who are furloughed as long as they're critical duties, but they've not given any indication as to what those critical duties might be. It's just making some people a little bit nervous, in that if you've got somebody furloughed and then you've got somebody who's working and you ask the person who's working to do the duties of that furloughed person, should that person actually be furloughed in the first place? Because the whole point of the furlough scheme is that, you know, they've not got the work there for that individual. Whereas, as we all know, a lot of us and a lot of employers are using the furlough scheme just as a cost reduction measure, but that's not actually what it's supposed to be there for. So it's just sometimes a little bit of caution that needs to be applied in certain situations.
And I just say there, I actually totally agree with you, because I've heard many stories of where it is nothing more than a cost reduction exercise, and people who've got childcare problems are met happily and merrily to go along with it. But it will be interesting as things develop in the autumn how these people come back into the system.
Yeah. Yeah, I mean, there's going to be so much unravelling, isn't there, you know, in the months to come, and so many people potentially being challenged over the claims that they've been putting in. So we've just got to, as you said earlier, we've got to make sure they're bang on, they're legitimate, and then, you know, there can't be any challenge. But so another area that we get asked about a bit, and this sort of links into Alan's query before on health and safety, is home working, and what should be done about staff home working. We're not health and safety experts, however, it's really important to make sure that there are some risk assessments being done for your staff if they're home working. The same rules apply whether you're working in the office or at home. Also think about things like company equipment and insurance, because I know with our office, for example, we immediately picked up all our laptops, various other pieces of equipment, and all went home. And it's again looking at the insurance aspects of that. Are those pieces of equipment insured on your business policies for people working at home? Just quite recently, there's been some changes to the guidance on shielding. So there was a 3-month period whereby people who were clinically vulnerable were told to essentially isolate. But as of the 1st of August, GPs will now stop providing any shielding fit notes for people. So it basically means that people who have previously been shielding, and a lot of those people were put on the furlough scheme, they'll no longer be able to be on that scheme because they're shielding. So it also means that they're unable to claim SSP. So they've either, employers have got to do something about them. So they've either got to return to work if those work environments are going to be safe enough for them, got to look at home working for them. Or if they have already been furloughed before, then technically they can continue on that scheme. So it's just to say that really the shielding fit notes are going to stop. There are a lot of people who are worried about returning to work from furlough, whether they are in that clinically vulnerable category or just the general population. And there's lots of advice out there for employers on making sure that those workplaces are safe. The government has produced lots of guidance that's there on gov.uk, some of it very industry specific. But the message from ACAS and the industry bodies in terms of the HR and the employment law side of it is that you've got to be flexible. You've got to look at each case on an individual basis and look at that person's circumstances. So if you've got people who are really worried and they do have serious health conditions and they can continue working from home, the advice is that they stay at home. You've got to be really careful about potentially forcing people to return to work when they're not comfortable in doing so. But talk to people, be transparent, share your risk assessments, share everything that you're doing in the workplace to try and give staff confidence in what's happening. I think as well, also be mindful of the childcare issue. We're now going to be fast approaching the summer holidays. The situation hasn't changed for a lot of people who've had childcare issues already. They're still going to have childcare issues over the summer holidays. Goodness knows what's going to happen with schools in September. I think we're all keeping our fingers crossed that we get back to normal by then, but potentially we might not have done. So the government has recognised that childcare responsibilities are a barrier to people's return to work. They are fairly comfortable that people in that situation can remain on the furlough scheme. However, when that comes to an end, if schools are still affected, we've got to look at other measures. It could be that there's lots of flexible working requests at that point. It could be that people are asking for unpaid parental leave. There'll be lots of things that start to unravel, I think, when it comes down to childcare responsibilities. Again, bordering on a bit of health and safety, but people have been asking us whether it's okay to conduct temperature checks on their staff to see if they're safe to come back into work, which I don't know why I'm laughing.
My forehead.
So yeah, it's just one of those to be very mindful of. It's obviously you'd have to get somebody's permission is the first thing, but it's then about that processing of that data. You know, you're capturing what could be seen as sensitive personal information there, and the Information Commissioner's Office has done a piece on this and put a lot of information on their website. So if anyone does come across anyone or themselves is looking at doing something like that, it's just making sure that from a data protection angle that you've got all your legitimate interests covered off, and that you're able to justify why it is that you want to be looking at doing that. And yeah, it is legitimate. It seems quite potentially an excessive measure, but it's something that some larger employers are definitely looking at doing. And finally, I just wanted to touch on redundancy. Unfortunately, that's a lot of the questions that we're having at the moment, because people are now planning for the end of that furlough scheme and seeing, you know, what their businesses are going to look like when they come out of the other side. Just a few areas to maybe have a think about is, you know, you've got to look at whether you have exhausted all alternatives, especially whilst this furlough scheme is in operation. What we're saying to people is, whilst that scheme's there, use it, because if you start making redundancies too early, it could be questioned later on, because we're expecting to have lots and lots of unfair dismissal claims when we come out of the other side of this, due to the numbers really of redundancies. So always make sure that you've used what's there to its best advantage. So the longer that you can keep people on the furlough scheme, the better. That's going to look better for you in the long run. In terms of consultations as well, that's been another hurdle for people initially, because we're all very used to conducting meetings with employees face to face. So when it comes to redundancy and holding consultation meetings, immediately the question was, well, how are we going to do that? ACAS even published some guidance saying that Zoom, Teams, phone meetings are absolutely fine, and it's really changed the dynamics on how we're communicating with staff during this period, and it's made it now okay to be having those meetings more remotely, whereas previously it was always that, you know, face-to-face meetings were definitely the way to go, but it's totally relaxed now, so don't worry about having meetings over the phone or video. I think as well, about just to mention, if there are redundancies going on, just to be mindful about the pooling and the selection of people. We're often asked whether we can just select people because they're the ones who've been furloughed, and it just makes it easier. The answer is potentially not. If they're in a standalone role and they've been furloughed, that's a different scenario. But if they're in a pool with a number of different people carrying out the same role, some are back in work and some are furloughed, you've still got to go through your usual processes, pool all those people together and do a fair selection using objective criteria. So just don't be choosing people just because they're the ones who are on the furlough. Just also to say as well that notice periods and annual leave, as I mentioned before, must be paid at full contractual rates, because we're often asked, well, they're on furlough, so can we just pay the notice at the furlough rate? So the answer is no, that's full contractual rate. And redundancy pay should be based on full salary as well, and not any furlough rate that people are on. And just finally, it's just to say that at the moment, it's highly likely, and most people are claiming the 80% furlough, or the reduced amounts when we get into September and October, for periods of notice. We're not seeing anything that's telling us at the moment that we can't do that, but there's still a question mark in terms of the retention scheme as to whether that is going to be okay. But at the moment, we're suggesting that is. But I think the guidance, as we said earlier, is just changing weekly, and something might come out which changes that piece of advice. Right, that was me done. I've got a couple of questions. I have as well put a bit more detail in that and written that up, so Ella's going to share that with everybody this afternoon, just in case.
Right.
Okay, so
yeah, I've seen a few questions on the screen. Alan, would you like to tackle that?
Yeah, the first one, certainly from my friend Maureen. As the name implies, I thought the furlough scheme was to secure jobs, but all those large companies are now sacking or making the staff redundant. Why is there no clawback? My staff have retained full pay and worked throughout. Isn't it unfair that other employers are being given £1,000 each one? Yeah, well, obviously I have to be careful because I'm not politically motivated in anything I say. But actually, if you think about it, just let me move this question to the side a second. So, right. The furlough scheme actually was, let's be honest, the furlough scheme was created to stop rioting, because if everybody had just been sent home with no pay, we wouldn't have survived March, would we? Most people are, what did he say, one paycheck away from from bankruptcy, 2 months or something like that. So the furlough scheme was dreamt up just for the state to ensure that people had the money. Yeah. It wasn't necessarily anything other than that. If I did a what's the word? If I did a requested account of how many people knew what the word furlough was before March 2020, there'd be very few. I believe the word comes from the Dutch originally, something like that. Anyway, the question, therefore, is that, yes, there are large companies now sacking or making staff redundant. And I think, Maureen, the point I would make, and I'm not being political here, is that a lot of businesses that were already suffering before COVID have clearly now used the end of the full, the 80% are now looking at taking people physically off the payroll, making them redundant or whatever. You say about they're just trying to encourage people to keep them on a payroll, albeit going forward, it'll only be, is it 60% subsidy and it goes down? They're hoping that people will be kept on the payroll, and this little carrot is being given of £1,000 to achieve that. And as I said earlier, in my humble opinion, for what it's worth, that £1,000 is really is a bit of a carrot so that people aren't laid off in December over the Christmas New Year period. That's my opinion. I will never know if I'm right or wrong on that statement. There will be, the clawbacks will happen, as I said earlier, if the revenue get a tip off. So Mr. and Mrs. Disgruntled contact HMRC and say, you know, we got 80% of our pay, we were furloughed, but they still expected us to do certain work here, there and everywhere. Those will be the first cases where they will attempt the clawback, but there's not going to be any clawback just because they are now having a payroll reduction by sacking or making staff redundant. The scheme was dreamt up just to ensure that people had money so they could survive in this modern age. That's where we're at on that, Maureen. I'm not sure it's a perfect answer, that by any stretch of the imagination, but that's where we are. Right. Let's get back to some boring bits. Loan charge. You remember that? People had to declare on their tax returns for 5th of April 19 and submit by end of January 20 a submission to pay tax on the loan charge that had been on any loans that hadn't been repaid through some tax disguised remuneration arrangements in the period up to and including years, well, up to 5th of April 18, I guess. It went before the parliamentary committees, review people, and they slashed the figure, saying, whereas before they were looking at 20 years, you would only look at loans going back to 2010. A big victory. That, but HMRC didn't say that didn't mean that you would still owe the tax, because if your company or your own affairs were under inquiry, those earlier periods remained under inquiry. And if the bottom line is that we determine ultimately, be it this year, next year, 5 years down the line, that tax should have been paid on those disguised emoluments, then you'll still owe it. So what was the effort on the part of the revenue? They were trying to get people to enter settlements, so whereby the monies that were due would be in a formal contract, not just covering the years post 10, but where there was an open inquiry of some description, they would seek to include those in. If you didn't reach settlement with the revenue, then the expectation was you did put it on your tax return. The revenue said they would now allow you up to the 30th of September 2020 to declare that loan charge, if that's the route you chose to go down, over a 3-year tax return period. So that would be effectively, by my maths, years ending 19, 20 and 21. How many people have done that? I haven't a clue, but the time is fast approaching, and in normal circumstances, I'd be saying to you, and we get to August and they all go on holiday in the revenue. I am aware I've probably still got open upwards of 10 cases where people who've had some serious disguised remuneration, some running into 7 figures, some running seriously into, you know, between 200 and 500,000, who haven't yet settled. Why? Because they believe the magician will pull the rabbit out of the hat, and as a result of that, it'll all just go away. It isn't going to go away. So if you have any clients who had previously approached HMRC by the autumn of 18, which I think was the earlier deadline to reach settlement, and haven't yet, you should have, or your client should have, excuse me, been receiving letters in May, June and July saying, do you still want to settle? Fill this form out. What's your income? Under 30k, you can pay over 7 years. Income between 30 and 50, pay over 5 years. Oh, it's more than that and you need time to pay. What's your income? 1 line entry. What's your outgoings? 1 line entry. In brackets, please note you should not include any income met by anyone else in your household. So I guess that's common law, traditional marriage, partner, whatever. You don't include their income. And if you can submit that, and the likelihood is on one case that I've submitted is they've then asked for some serious detail behind the numbers, possibly because they don't believe them. In my opinion, if you have clients who have assessments or open inquiries and want the best deal out there, they should settle and get it settled. But you've got to get it settled, they say, by the 30th of September, because that's the date when the loan charge amended 1819 tax return has to be done, and making a decision to declare it in one go or over 3 years. If you don't do it by then, or have the settlements in place, then as and when they catch up with you, and let's say they're already open inquiries, there will certainly be penalties. So there is a great incentive to go down the loan charge route, spread over 3 years, no penalties, or reach a contract settlement with them with no penalties, and potentially get it over a longer period than that. The best one I've achieved, people, at the moment is one that's going through for 10 years. What's that, 120 months? And that's going through, and I'm reasonably comfortable that will work. The lady concerned is having to pay £2,000 every month for 10 years, but she's comfortable with that because she's not having to raise any serious capital. So please look at them. If any of you want any support, you know where to contact me. Right. This is a common thing, or I think it's common anyway. People who allege that they run a business, inevitably it's a farm. So as you're probably aware, HMRC's view is that a hobby farm doesn't, and you make losses, they're not available to relieve. If you have set out to make a profit, but after I think 5 years you're not, the revenue will probably challenge it. This is a case that was heard earlier this year, and it's the decision of, I'm not sure how you pronounce this actually, it's HMRC versus Naghanaya. And what this was 25 years ago, the taxpayer bought a working farm of about 75 acres. And over the years, he added more land. And by 2007, he had over 400 acres. He was a businessman with no experience of running a farm. He never lived in the farmhouse. And in 2007, he employed a general manager who he made redundant in 2010 because the costs were getting out of control. It was run as an organic farm. Okay. And in the end, he had holiday lets, a farm shop, a microbrewery, toy making, and a mustard business. And in the end, he wound the business up and he claimed terminal loss relief. And at that point, that was when the revenue asked, and the revenue won the first tier, lost the first tier tribunal and appealed. In the upper tribunal, HMRC's appeal was allowed. And this is what the upper tribunal's approach was. And it's all about applying the reasonable expectation of profits test. The upper tribunal judge said it was necessary to determine the activities which were carried on in each year of the loss. And in this case, each of the 5 tax years up to 2012. The second issue was one should assume that those activities were carried on at the beginning of a loss period and then ask how long a competent farmer at that date would have expected it would take for those activities to become profitable. Well, I'm going to say something a bit cynical now. Have any of us ever met a farmer who makes a profit? Because as you know, they are the guardians of the countryside and profit is the least of their problems. Equally, I've never trusted most farmers, but we won't go there. In considering that it was necessary to look at the nature of the whole of the activities and the way they were carried on in the relevant loss year, only if the answer was that it would have taken until after the end of the relevant loss year and it was not reasonable to have reached a different view was the test satisfied. Anyway, the upper tribunal said, based on the facts, it said that in 2007-8, the activities actually carried on in that year were mixed-use organic farming, the process of conversion having been completed some years previously. So, if the competent farmer had been assumed to be carrying on those activities in 1995, he would have reasonably expected them to become profitable by the early 2000s. Even if the competent farmer could reasonably have expected profitability not to arise until 10 years after 1995, that would still have been before the first period of the loss year under appeal. The taxpayer did not meet the reasonable expectation of profit test and sideways relief was not available. That was to relieve against other income. So I'm reciting that because too many clients over the years have come to me and said, oh, I bought a farm and I'm renting out 3 fields to my nieces so they can put the horses on it and we're going to set a gymkhana thing up and we're going to sell some hay. That is not a trade. Right. Paper self-assessment tax returns. I don't know if you're aware, but for tax year 2019-20, self-assessment taxpayers will no longer receive automatic blank paper returns. This is all part of HMRC's attempt to encourage people to take advantage of the online service and cut, and I hate this word, they say cut unnecessary use of paper. It's only unnecessary use of paper if you're not using the paper. And if you're using it to fill a form out, that's nonsense. Last year, 94% of filers filed their return online, and HMRC recently saw a 110% increase in people registering to communicate digitally. Say that when you've had a few drinks. However, in the same time frame, HMRC automatically sent out more than 500,000 paper returns. Taxpayers will still be able to file a paper return if they choose, but HMRC will encourage those who are able to file online to do so. The environmentally friendly measure means that from April 20, instead of automatically receiving a paper return, taxpayers who filed in the past will now just receive the basic short notice of file. If they still wish to file on paper, they can download a blank version or call HMRC to request one. The notice to file will alert taxpayers that HMRC intend to communicate with them digitally and provide them with information about managing their tax return tax affairs through their personal tax accounts. Now, think that aloud. If you get that letter and choose not to set a personal tax account up, they can't communicate with you digitally. It's that simple. I've created my own digital tax account and it's okay. But when I have an issue, I still ring them up and shout at them. Right, umbrella companies. This is, I don't know if you know, HMRC issue occasionally something called a HMRC spotlight. And they've issued this spotlight. And I'm just going to read it because in a way it's quite pertinent if you get a client who comes to you and says, oh, I'm going to be paid through an umbrella company. What do you think? Now, this is the revenue's view on it, but it is useful. They say, most umbrella companies are compliant with tax rules, but there are some promoters of tax avoidance schemes using comparison and broker websites that introduce people to umbrella companies which do not abide by the tax rules. Comparison websites often act as brokers to help people find a suitable umbrella company by ranking and rating the companies based on customer service and fees charged. HMRC now provide the following warning signs to consider. Adverts for umbrella companies listed on comparison websites are not always legitimate. Look to see if the umbrella company has A, now don't laugh, A, company name, postal address, and a company registration number. Some may have very basic web pages with little or no information. They may only have a registration form asking for your personal details to receive a quote. You should do research to verify that it is legitimate before providing these details. You should always ask for a full and transparent breakdown of all deductions the company will take from your salary. This is to ensure you pay the correct amount of income tax and national insurance. Well, okay, so you get that breakdown, but you're not a tax advisor. How would you know it's right anyway? Your payslip should show the salary rates you agreed for the job and the correct tax deductions. Non-compliant arrangements are sometimes called advanced or enhanced umbrella services, which may offer services such as, we ensure you get the highest take-home pay. Well, that sounds good. Retain 80% of your earnings after tax. We only use HMRC compliant umbrella companies that are independently reviewed. HMRC go on to say, these statements are misleading. We do not approve any umbrella companies. So be warned, people, umbrella companies, as far as the revenue are concerned, be careful, because in truth, and being serious for a moment, a lot of the umbrella companies are a good alternative. And most of the sort of bad press that they used to get has probably disappeared now because the world's moved on. I've probably told this story more times than I wish to remember. Back in the day, I remember an umbrella company that used to have on their payroll subcontractors or people in the construction industry. And one day, our then payroll manager said, you seen this, Al? And I said, what is it? And he said, oh, it's a payslip from my nephew. Had its pay on and everything. And it had tax allowable expenses in brackets, car. I says, oh, right, okay, if they're legitimate, fine. He says, oh, there's one problem, Al. He hasn't got a car. That says it all. You know, you can't have a car allowance if you don't have a car. Sorry, not a car allowance, some car expenses. Anyway, I think with that, Ella, what I would like you to do, if it's okay, would you just spend 1 minute closing down for us? And I don't know if we've got any further questions through. Have we? No, I don't think so. If you've liked this, I know young Steve likes this. You can smile, Steve. He likes it because he's young. I'm very comfortable with doing it this way. It's been really good having some of the people from other parts of the UK attending. You know, Mohammed, Ganti, and gym and whatever else. But let me know what you think, and ring me by all means if you can suggest some improvements. I know Ella's going to tell me to sit up or move my camera a bit, but it's been a good experience. We don't truly know where we're going to be, and as Jane said earlier, it's going to be very, very difficult, because if there is a spike, it may be some time before we can gather. But if people like how it's been done, we will, Steve and I will work with that and take it forward. Yeah? You can nod. Yeah.
Yes.
All right. Okay, Ella, over to you, my friend.
Okay, so if nobody else has any question, then I suppose we will wrap it up now and end the session. Thank you once again for attending today's